Oh, hi everyone. Welcome to the webinar. And as always, before we begin, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, and given what the markets have been up to in the last few days, if you've been on the wrong side, oh boy, it would have been a salutary lesson. So please don't ever think of coming into this market, into this business with money that you cannot afford to lose. So very quickly, let's have a look. Here we are. This is me, this is David, and we're going to be having a look at the charts and the market through the prism of volume price analysis and our quantum trading tools. For those of you who haven't been with us before, volume price analysis excuse me, is the methodology David and I have been using for many years now. It's all explained in the books that are on Amazon, and for forex we've actually bundled a little set of books. It's a digital library, and it explains the, as I said, the volume price analysis, which is the technical analysis side. It's the chart reading that we have used. It's used price action, it uses volume, obviously, it uses support and resistance, candle patterns, and all within context of time, and time being multiple time frames. So we're going to have a look at multiple time frames to see how they can help us judge whether a move that we can see in one time frame, i.e. the time frame that you're looking to take the trade, is actually going to, it's going to go somewhere. Are you trading with what is happening in a slower time frame, or are you possibly going to take a correction trade? Which is nothing wrong with a correction trade, because there have been some fantastic correction trades over the last few days. But that's just one element of what you have to learn to be a forex trader. You have to understand what's happening in the fundamental landscape, the releases, how are they going to impact the price that's on the chart. I know there's a school of thought which says everything is contained within the price action. What you see on the chart is a complete summary, if you like, of all the sentiment, and it's all factored in, as it were. It's baked into that price. Well, that may, I don't think anyone's been able to prove it one way or another. All I can tell you is that if you're not aware of fundamental releases, creeping up on you, then you can take a serious hit. A prime example of that has been the interest rate decision with the Central Bank of New Zealand. Market expectation, they were going to cut, I think, by, is it 25, David? Yeah. And in fact, they shocked everybody and went the whole hog and did 50 basis point, and price was all over the place. You can't say that the chart was already set up for what the market expectation was for the fundamental news. You also have to know what items of fundamental news are likely to affect a particular currency and currency pair at a particular time, because fundamental news is cyclical. It has its own cycle, and at different times of the business cycle, the economic cycle, different items of news have more significance, will have more impact. I know Forex Factory does a fantastic job, and gives every piece of news like a traffic light system, red, amber, and red, yellow, and orange, giving you an idea of what's likely to have more impact. But it doesn't always mean that what's highlighted as red is necessarily going to be as impactful if it comes at a different time of the cycle. That's all explained in these books. But there's another analysis that you have to understand and have to appreciate, and that is what we call what's going on in related markets, because all the markets are interconnected. That's the capital, the four capital markets, and it's all explained in our education program. So basically, we have the technical, we have the fundamental, and what David and I call the related markets, the relational analysis, and understand how these connections, how they're made, why they're there. Sometimes the connections break down. A classic connection is if the US dollar is going up, then gold tends to go down, and vice versa. What is very serious in the markets is if you have gold going up and the dollar going up simultaneously, then that is telling you that something is not right in the financial markets. It's very stressed. investors are hugely worried about what is going on, and so as I said, it's what the related markets tell you through these connections is the sentiment, and also there are links between the different markets and individual currencies. For example, the Canadian dollar and the Canadian and oil. So that's a very classic connection, and everything is explained in huge detail in the forex program. It starts off in the books. The library, the forex library, is $9.99, and then you can step up and go to the forex program. And the indicators that I mentioned earlier from quantumtrading.com, we've developed them, David and I have developed them for our own trading. Covers all the markets, but for forex we have four very specific indicators. We have the currency strength indicator, the matrix, the array, and the heat map. And basically what they do is, first of all, they disassemble the flow into the individual currencies as shown by the currency strength indicator. I said earlier we've been seeing some yen buying. It's not huge because sentiment has kind of picked up since the huge sell-offs that we've had over the last few days. You know, markets are quieter, but suddenly this morning there's been a touch of yen buying, and that's what's shown on the currency strength indicator. The matrix then takes that data and highlights which of the yen pairs, if you like, is being bought most strongly or sold most strongly, and the other pairs, of course. The array picks up the momentum, and the heat map looks at the performance of the currency pairs across multiple time frames. And you can find more details of the individual indicators and the full package of indicators at quantumtrading.com. You can buy one, a bundle, or a full package. All indicators are covered by our 7-day money-back guarantee. You get support for life, and all upgrades are included. You also have, as I said, a 7-day money-back guarantee if you're not happy with anything that you purchase from us. The advantage of the full package is that when we develop new indicators, they are automatically added to your package. If you buy one and then you want to upgrade, you want to buy another package, or 2 or 3, we will always credit you with whatever you may have purchased. And the platforms are MT45, NinjaTrader, TradingView, and we're working on TradeStation. I've got MT5 up, and David has NinjaTrader. And the site is quantumtrading.com. All the information is there, videos, prices, etc. The program. A program actually includes the full set of tools. You simply select which platform you would like them for. And as I said, if you've bought anything from us, you'll always be credited with, put a credit against the full program. And it really is, it's all you need to know to trade forex with confidence. These are the modules that are part of the program. As you can see, very, very comprehensive: psychology, fundamental, relational, as I said, the related market, the technical analysis, which is really a very deep dive into volume price analysis, and then we have the mechanics of trading, which is the sort of practical side, if you like. And as I said, it's all there at quantumtradingeducation.com. Details of the books and my own analysis and what I'm up to on my various Facebook pages you can find at annacooling.com. Sorry, I've galloped through that because we were a bit late starting with all the technical issues. Right, let me just shut that down. As I said, we've been looking at the yen this morning, and I seem to have lost my charts. Where have they gone? Hold on a second. Move that over there. Here we are. Yeah, I know. We were this morning, as I said, it was a bit of a slow start, but given what has been happening over the last few days, it's really, it's no surprise at all. And the markets can't run at that kind of speed every day. And in fact, we had an email from someone. Do you remember, David? People who come into this business obviously have seen films about trading. What's the one with Eddie Murphy, where he ends up being a commodity trader? I'm sure somebody. Trading places, that's right. And he, you know, he ends up being this this very successful trader. And you know, you've seen trading floors, lots of shouting, lots of you know, lots of activity, and there's the impression that when you come into trading, it's going to be at a very fast pace and, pardon, frenetic pace all the time. It doesn't. And the other thing to bear in mind with the forex market, that it's, although it's a 24-hour market, there's actually three very distinct sessions, because you know there's going to be local news, there's going to be obviously global news. We have all the issues with China, we've got geopolitical tension, we've got Iran, there's things, you know, issues coming up in India and Pakistan, etc., etc., etc. So you know, it's a very broad landscape. And then you have the individual sessions into which you have the local news, and by local I mean here in the UK we've got Brexit, so you have local. Then you have another layer on top, which is the broader market sentiment, but sometimes that broader market sentiment doesn't necessarily translate into the individual sessions. You also have different depths of liquidity. As I said, there are many factors that will influence the, you know, the price action on this chart, not least the manipulation that goes on by the banks who actually run this market. So what we do is we look at a currency strength indicator. This is my 20-minute one. And you can see here, this was the sort of buying that was coming along in the yen, although on the faster time frame, it seems to have, as it sort of slowed down a little bit. Yeah. The fantastic thing about this indicator, and as I said before, is not only does it track, if you like, the flows going into the individual currencies. This is the yen. The purple is the CAD. As you can see here, they're all labelled the British pound. You have these movements. And you can have really nice strong moves, as you can see here, where the angle is very sharp, and there are no kinks in this line. That is telling you that that is a strong move. What is also telling you is when the lines are quite floppy, and especially when they're stuck in the middle here, and there hasn't been strong divergence in one way or another, that is also telling you the market is sort of congesting, there's not a lot of movement, and we just have to be patient. And there's two ways of using this indicator, any indicator really, is you have to decide this as a trader. Are you what I call like a predatory trader? So you look at an indicator, you look at your charts, you know, maybe all 28 that we consider in this market, and you think, do you know what, I'm just going to look for where there is an opportunity for a trade? Or do you say, I can't cope with looking across so many pairs, I just want to focus on maybe 5, 6 or 7, and you choose those, and they're also got to be think of them as what are the pairs that are going to be likely to move in the session that you're trading, and you use the indicator in the same way. So for example, if you were a cable trader, you would be looking at the yellow line, which is the British pound, and you would look at the red line, which is the dollar. You can see that there's been some dollar buying now coming in. The yellow line looks to be turning up, but it doesn't, you know, not with a great deal of conviction. So maybe you know, the dollar buying is stronger in another of the majors. So you might say, okay, well, I'm going to sit back and I'm going to wait, because what happens with flows is they rotate. The flows of dollar buying may start in one pair and then move to another. So let's look. I mean, I'm not looking at a dollar pair at the moment. I think David is, and he's been looking at the pound yen as well. But you know, the Aussie would catch my eye here with the dollar at the bottom here. And what we could do is, this is why we developed the matrix. So we say, okay, well, we see dollar buying, let's see where it's being bought against. And in fact, it's being bought against the Canadian. And where's the Aussie? The Aussie's here. Well, the pound is actually very close to the kind of movement that we can see in the Aussie dollar. So what the indicators do is they take away the need to go and have a look at individual charts. But what I said earlier, before we move to David, is I want to, because originally we were looking at the yen, because there was some movement in the yen, and I was looking at the CAD yen. And the reason I was looking at the CAD yen, as I said, I could see there was yen buying. Let's have a look here. Let's just bring up the yen again. Let's have a look. see the relative positions may have moved since then. Oh, here we are. This is on a sell of it's a buy of the yen, so obviously a sell of the counterparty. And in fact, it was a toss-up between the New Zealand yen and the CAD yen, and the pound yen that David was looking at has gone a bit sort of it's a bit waterlogged at the moment because it's at spot 21, and it was either between the CAD or the New Zealand yen. I've focused on the CAD, so that's it. Picked up, highlighted a potential move. What I've got here, I've got a Renko. I've got a 3-minute chart, I've got a 6-minute chart, and I've got what I call my benchmark chart. This is the chart that I'm looking at that basically is going to tell me, am I looking to take a trade against what is happening on this slower time frame, or am I actually probably going to go with the sentiment in this slower time frame? Don't forget, with a pair with the yen in, we have had a reversal in sentiment in the sense that after the big sell-off, markets have calmed, sentiment's become a bit more positive. You only have to look at what's happened in the indices yesterday. Extraordinary price action. We'll be dealing with that in our webinar later on this afternoon. But what's interesting by using multiple time frames, and particularly the 30-minute chart, is this. I'm looking at potentially a trade on the faster time frames, but what my 30-minute chart is telling me is that actually the price action on my benchmark, my anchor chart, is actually in congestion. Why is it congestion? Well, first of all, I can see just by eyeballing it that it's moving sideways. But more importantly, one of the indicators we've developed is the volume point of control. This is this yellow line here. This is where we look at volume, price, and time. And where this yellow line is, it's on the point of the chart that the price has it's range bound. It's like a balance on the chart. There's no divergence one way or another. There may have been a little bit of divergence on a faster time frame, but what it's telling me that any divergence on a faster time frame is probably not going to go very far because there isn't enough movement in, as I said, my 30-minute chart. When you put together your time frames, you can put together whatever time frame you like, and a lot of it is trial and error. On MT5, you do have a much wider choice of time frames. So I've got the 3, as I said, the 6, and I've got the 30. So the 30-minute chart is telling me that actually, whilst on the faster time frames, I could see here, in fact, we've had a move away from the volume point of control, but it's more of a drift, as you can see here. It's really not had an awful lot of conviction. We've had, then we've kind of stopped at this support at 79.84. Now we're moving sideways, and it's mirroring what we can see on the 30-minute chart. What's also important is, again, sessions. We're 5 minutes away from the start of the session here in London. So markets, are we going to have a complete reversal of sentiment? We may have seen some yen buying coming out of Asia and into Europe, but are we now going to see, as I said, a reversal because it's London, because it's deeper liquidity, and because we have a whole new bunch of traders? And this is what this use of multiple timeframes will tell you, and what our indicators will tell you as well. So I'm going to pass over to David. Is that okay? Because if you've got the tick speed to show as well, what we've done with NinjaTrader is when we have a market that seems a little bit desultory like this, it's very difficult to judge. Well, certainly on a time chart, you have no idea when in a 5-minute candle that's posted, you don't know how fast the market may have been moving while has been developing, as it were. So what we've done on NinjaTrader, we've developed something called tick speed, which essentially measures, if you like, the speed with which a particular instrument is moving. And obviously, the more speed is based on activity. If there's lots of activity, the chances are it is going to move. Of course, that comes with additional volatility. But those of you who come regularly will know, we understand about volatility and how, yes, it can be your greatest enemy, but it can also be your greatest friend. And I don't have that ability on MetaQuotes because of the way the data, we just cannot develop a similar indicator for meta quotes, that's MT4, MT5. So the best we've got is this Renko indicator, which basically doesn't have time. One of these little bricks is only going to post once 1.38 pips has gone through the market. Now, the nice thing about Renko, you have to eyeball it. So when there's a very fast move, as we can see here, that probably happened quite quickly. But at the moment, as you can see here, it is actually quite desultory. You just have to watch and, just as I said, eyeball it. But I know this isn't, having looked sort of quite promising earlier on, it's actually going nowhere. Why? Because it's on the volume point of control, it's in congestion, it's in consolidation on the 30-minute chart, and in fact it is in consolidation following a move higher. It's an improvement in sentiment in the overall market. So really one chart, you've got VPA, you've got the indicators, you've also got how we're related, what's happening in the broader markets, related markets. We've also got CAD, it's also got oil in here. Everything is in one chart, but if you don't understand all the elements that make up the price action in this chart, just by looking at some very simple metrics, if you like, a moving average, and saying no, nothing else matters, I think you're going to struggle. As I said, everything is explained in the library, which is at Amazon, $9.99. Pass over to you, David. Is that it?
Hi everyone, hopefully you can see my charts. Yep, just looking over on Anna's, that's great, and hopefully you can hear me as well. Apologies for the awful start and the echoes, which always happen when you've got two headsets open. Apologies for that. As Anna said, the last few days have just been extraordinary. Very, very strong moves, not just in the forex world, but also in terms of commodities. Terrific moves in gold. A lot of safe haven buying in there, and indeed also into the Swiss yen and various other markets too. Normally, we're just seeing the start of the London Open, so hopefully we'll see a pickup in volatility and certainly pick up in volume that's been occurring over the last hour and a half since we've been at the screens. What's unusual about this period is, and I know many of you know this anyway, but in the run-up from European 7 o'clock through to London and on into 9:30, 10 o'clock UK news and everything else, it's usually a great time to trade. It just so happens that today, and it's no great surprise, it's one of the things that happens when you get these very, very sharp moves across the markets that last 2 or 3 days. Invariably, you're going to get a pause point, and this morning certainly been that case, because pretty much universally across, certainly in terms of forex, I know there have been strong moves in oil, and to some extent gold, but even in those markets they are a little bit exhausted. And as you can see, I've got the Aussie, I'm going to flick through the yens. I've been flicking up and down while Anna's been talking, but they've all got a similar characteristic. They're all trading around the volume point of control, this yellow line here, which you can see I've got the 1 minute, 3 minute, 5 minute strung across the top. Down at the bottom I've got 15, 30 and down onto the daily. So they're all trading around these tight ranges. We're building volume around the volume point of control. London's coming in, so we'll start to see some reversal trades and some trap moves coming along, no doubt. And just down onto the daily, this is the characteristic that you're going to see across many of the charts. Just pull that out a little bit bigger. There we go. The characteristic of these last few days, where we've seen very strong selling of commodity currencies, very strong buying of yen. Then we've had huge volatility moves, and we've also had these very, very deep hammer candles on certain charts, and the inverse on charts such as Euro, Aussie, where we've seen strong selling of a currency, and then that's reversed intraday into strong buying. This has been the case yesterday, and that was also reflected on US indices, of course. And what we've now got are these very, very deep wicked candles, certainly on the daily chart. And as you can see here, associated with a lot of volume. Not as high as here, but certainly, given that we're in the middle of August, this is pretty strong flows of volume. So we're looking at some decent buying coming in under these strong candles. Does that automatically mean this market is going to reverse? not straight away. It just implies that we've got some stopping volume coming into the market. We've had this very strong fall, and we've now got stopping volume coming in, and what we're expecting to see. And in addition, that's confirmed by the fact we've got volatility trigger here as well. We'd like to see some congestion at this phase of price action, and given this is a daily chart, this could go on for a little while. Doesn't mean it's not going to reverse, it just means we're going to see congestion for some time. And that's a characteristic of all of these charts now, given the price action of the last couple of days. So that's the Aussie yen. Let's just go to the pound yen, see what's going on there. And if the pound yen's not moving, then you can be assured everything else isn't moving, because the pound yen is the most volatile of all the yen pairs. As you can see, go up onto one. Nice little trap move. This is characteristic of the London Open. Just so easy to make money for the market makers. It's laughable, to be honest. This is 8 o'clock. Nice thing with Ninja is that it actually prints real time where you are. So we're obviously in the UK. So this is 8 o'clock. So this is London getting underway in the 1 minute. What do? First move is trapped down to the downside. Everyone thinks, oh, we'll go short, gets trapped. Market reverses. Ton of volume coming in, as you would expect. Lots of buying in here, and bang, we're off up to the upside. And before you know it, you're 24 pips down. It's very, very simple. You might say it's cynical. If you were a market maker, let's face it, that's what you would do, because it's just so easy to make money. And you've got it replicated on 3, you've got it replicated on 5, lots of volatility coming in, nice trap move, and off we go up to the upside, and bang, we're up to 24. We've gone 24 pips in a matter of 2 or 3 minutes. Got volatility down on 15 as well, no great surprise, what you expect to see. And we've got resistance overhead. So given we've got a volatility trigger here, what we're expecting to follow through from that is a reversal into that particular phase of price action, because they've now made their money. And let's trap all the long boys in here, and they're now going to get a bit of a squeezing to the other side. This is what happens. It's session crossover time. Let's go and see what's happening on the euro. Okay, euro's picking up a bit of momentum. No volatility on this chart for the time being. Decent buying under this candle here. That's on 5, so we've seen the move lower. Good volume under there. It's what we expect to see, but we're trading around the volume point of control again. And if you were going to jump into this market to the long side, then purely from a technical perspective, what I would be looking for, and this is really what it comes down to when you've got markets trading in tight ranges, you have to define the levels at which you believe would be appropriate for you to enter the market. In other words, those areas of support and resistance, those channels, and moreover, in terms of the volume point of control itself, have we got low volume nodes ahead? Have we got high volume nodes ahead, which are going to cause congestion? So in terms of just looking at this chart, for example, we're expecting congestion here because we're back at the volume point of control, so that's no great surprise. But if the market's going to continue higher and move on, then in terms of where we might be looking to get in, let's just pull this back a bit and go over to the left. Okay, so it's once we get up to this sort of area here, 119, spot 14 and beyond, we've gone through this region, which is going to cause the market at the very least to pause. This is a relatively strong level. The beauty of the accumulation distribution indicator on NinjaTrader, it's a price-based indicator. It's looking at support and resistance through the prism of price. In other words, how often has a region been tested and held firm? And the simple premise is the wider the line, then the more that has been repeated. In other words, the greater the number of times that area has been tested and rebounded off it, and therefore it's a stronger level. So for example, this region here, which has been tested several times and was also tested over here as well, this is it's a stronger area than this, and certainly stronger than these narrower lines here. So in terms of a platform of support, we've got a very strong platform of support here, which is doing its job. But of course, if the market breaks the downside, then that will then become a ceiling of resistance to any rally reversal against you. Up here, we've got this level here. This is reasonably strong. This is a little less strong, but you can see it's bounced off here. This is the reason it's appeared. So in terms of getting into this market, if you were looking to take a long position, what you're looking at is, first of all, the accumulation distribution, which looks at it from a price perspective. And then you're looking at support and resistance from a volume perspective. And you've got the volume point of control here, which paints this histogram. The greatest volume is at the volume point of control. That's why it's there. So for the time being, the market has reached a point at which it is in price agreement, in other words. So there's no strong bias to the upside or the downside. And we just have to be patient and wait for this channel to develop, and ultimately it will break away, because all markets have to break away. They cannot stay range bound forever. And in terms of moving to the upside from a volume perspective, then what we've got here is a very nice decline in the volume that is like to act as resistance to any move higher. And therefore, in terms of jumping into this market, when you're looking at it from price and volume, any region up towards this area is likely to be profitable, purely because we've broken away from this very solid range of volume, and we've also broken away from these areas of what can act as price resistance to any move higher. And of course, you'll be looking at that on the different time frames. You go up to 10, the 15, whatever your time horizon may be, and you do exactly the same as before. That's on euro yen. Let's just go to let's go back to, I think it was the Aussie yen we had up first. Let's have a look, see what's happening there. No, sorry, was it the Aussie yen? Can't remember now. This is the Aussie yen. Exactly the same as pretty much all the other charts. Deep volume buying here. We've got the volatility, and we're on the volume point of control. So that's the Aussie. Let's have a look at the CAD yen. See what's going on that one. As Anna said, closely allied to oil, of course, and oil's been on a sell the last few days, or certainly last couple of days at any rate. Starting to see a bit of movement here, perhaps more so than on the other pairs. Let's just have a look at the 3-minute. Let's get away from the slightly faster charts. And again, exactly the same exercise as just explained. You've got this very strong ceiling of resistance in here, this blue dashed line, extremely strong. But to the downside, pretty lightweight. Yes, we're around the volume point of controls. We've got to wait for a break away from there. Let's move the chat box out of the way. There we go. Low volume here down to 85. So you might be looking below that, 82, 83 as an entry possibly. A lot of resistance overhead, which is nice. Gives you protective cover if you're going short in terms of reversals. But for the time being, we're just trading around the volume point of control. So it's exactly the same story. Let's move that down out of the way again. There we go. Exactly the same story as pretty much on the other pairs. Let's have a look at New Zealand yen after it got hammered. See where that's going. As you can see down here, tried to rally yesterday after the news, overnight our time. Certain amount of buying in there, but only halfway up the candle. But again, you've got volatility trigger and volatility trigger. So what we're expecting off this trigger is a reversal inside the spread of that candle for the time being. Volatility appears on all time frames from the 1 minute. It even appears on the 15-second that I'm sure you've seen on the day trading rooms. It appears in all time frames, and when you get it on the daily, it just gives you a heads up as to what is likely to be happening. Am I going to see congestion? Am I going to see a reversal? What is likely to happen as a result of that trigger? And it's less common on the daily, and if you get it on the weekly, then even more so. Just to head over to, let's go back to the CSIs and the currency array I had up here. This just gives you an idea of what is going on in terms of strength or weakness across the complex. And this just reinforces the picture we're seeing at the moment. Under normal conditions, these lines will be sloping very steeply, particularly for those pairs which are moving. But what we're seeing here is very narrow trends. We've even got a mixture of yen sentiment in terms of the pound yen. We've got the pound yen up here, so some minor buying and some minor selling of yen here. Whereas down on the New Zealand yen, we've got a little bit stronger selling in terms of New Zealand. We've actually got buying of the yen here. So it just tells you that for the time being, certainly from the yen complex at any rate, first of all, the sentiment is mixed. It's not universal. If it was universal, all of these pairs would be either above or below the fulcrum line here of 0 on the horizontal. So if it was a universal sentiment of buying, then they'd all be sweeping to the downside and strongly. And if it was universal selling, they'd all be sweeping up to the top side, and you know, they should be up here somewhere with strong buying and selling of the yen, a strong buying of the currency and selling of the yen, and equally down here at the bottom. So that's what we're seeing. That's what the currency array is telling us right now. Just go back to the CSI, see what's going on. We've got some, this is on 5 minute. I've got 3 different time frames. I've got 5, I've got the 10 here, and I've got the 15. Just go down to the 5. We've got some decent buying of euro, which is starting to filter through. We've got a cross on the yen. So if we head on over to the euro yen, just see if that's developing. That's on the New Zealand yen. Let's go back to the euro yen and see how that's playing out. If I can type properly. There we go. Okay, we're starting to see that reflected there. Just see how strong that is. Let's go up onto the 1. Okay, this was 8 o'clock London time. Decent move there, but look at the volume. It was falling away as the market was rallying. So, you know, it's just telling you straight away it's not going to go very far. We had a rollover into this one. We've now got this up candle here. This is a widespread up candle. But look at the volume. If you look at the, and in fact, if you compare, bear in mind that what we're doing here is we're comparing volume and price from this point, because this is 8 o'clock. So we know for a fact we're comparing apples with apples in here. We're not comparing this over here because this is pairs. This is Europe, which starts over here at 7 o'clock. So this period, we can quite happily compare volume in here. From 8 o'clock onwards here, we're comparing these volume here, this volume and price action. So we're quite at liberty to take this particular candle and comparing it with this candle, which was the second or third of the session. Look at the volume. Had pretty strong volume under that one. This one here, apologies, there we go, it was the first one in. And look at the volume under this one. Okay, it's not quite half, maybe 2/3, something like that. Doesn't say it's going to roll over, but it just gives you a metric by which to gauge what is going on. And you do also have to remember, when you look at the London Open, there's always a surge in volume. So you're always going to see much higher volume, or generally speaking, anyway, I don't say always, but generally speaking, as the market gets underway, volume is going to be more pronounced in the first few candles, because clearly you get the surge in price action. And then it starts to attenuate a little bit. So this is relatively natural, but it just gives you an idea of what is going on. This, you know, if this was going to carry on strongly, then you should have seen that certainly reflected in rising volume. You haven't, you've got the volume falling away. And in addition to that, the spreads are narrowing as well. So it's not just a case of looking at the volume and price, it's also looking at the shape of the candles and their spread, because if spreads are narrowing on a rising market, excuse me, I'm just going to switch off for a moment. I've a frog in my throat. Yeah, back on. No, I'm okay. Sorry about that. Apologies. I'm in full flow. I have focus on what I'm doing. Now we're starting to see it pick up a little bit. As I was saying earlier, just you have to bear that in mind when it starts, and it's very similar to what goes on in terms of indices as well. At the start, the first 10, 15, 20 minutes, you're going to see a big surge in volume, natural attenuation down into the market as it settles, and so on and so forth. Trend monitor supporting that move, as you can see. Bright blue, we've had the transitional through, we had some transitional phases here, now we've come out the other side, we're into blue, and the trend line is rising, but it's a little bit flat, a little bit sluggish as we get underway. Just see what's going on in the other time frames. You can see the trend monitors rippling through into the 3 minute, so that's helping to support. We've got some very nice, some very strong platforms now in place. We've got 2, in fact, 1 here and 1 here. We've gone through those. So hopefully this is going to help us. This will act as a platform of support now. It was a ceiling of resistance. It's now acting as support, as indeed is this one. It's been breached. And in terms of moving through, we've got a low volume node here. So we would expect the market to move through there relatively quickly, relatively easily, because there's not much in the way to hinder its progress. And on up to 08. So we've got, another 4 pips here. This is all, it's fairly contained. Let's be honest. It looks a lot, but it's not huge. But nevertheless, if you're a scalping trader, that's what you're looking for. And this applies to any chart. So the technical analysis aspect, the the analysis of the chart, it doesn't matter whether it's a 15-second chart or a 15-minute chart or a weekly chart, it makes no difference. The analysis is the same. So if we move through here, we've got low volume, but it's starting to build a little bit because we're starting to pause. Then we're up to this level. If we get through this level, we're out and clear, off into clear water, and very lightweight in terms of resistance and a low volume node to boot. So that's looking all positive. If we go down to the 5-minute, well, we're excuse me, we're trading around the volume point of control again. So we're expecting congestion. So as a scalping trader, you've got to be aware of that, because the market is likely to congest, because on the 5-minute, every time frame tells you something different. That's what the 5-minute's telling you. Down onto 15. What have we got on 15? Probably a little bit too far out, but certainly from a scalping perspective at any rate, but it's certainly giving you more information. You've got some resistance on 15, which is acting, doing its job there. It's holding the market. It's sitting on the market right now. And that's part of the reason why the market is pausing at this point. That's what using multiple time frames tells you all the time. It tells you all the aspects of price behavior, the technical charts, gives you all the little pieces of the jigsaw, which you then drop into place. And as you would expect, we've seen no flicker in terms of the trend monitor, because this is taking a longer term perspective. That transition through to this short-term bearish sentiment is not being reflected on the slower time frames as of yet. If it develops further, then it will, but if it doesn't, then it won't. It's as simple as that. So that's what we're seeing on Euro Yen. That's looking a little bit tired now. Come to a pause point. We've got a pivot gone in here. We've got a 2-bar reversal here as well. So that's all adding up to some weakness developing in the short term. Don't think there's much in the way of fundamental news. Let's just go back on to, let's just go to the primary indices. This is the 4 of them. This is on 10 minutes, so relatively slow in the context of what we've been looking at. This is the yen top left, top right is the dollar, bottom is the euro. This is the minor sort of euro buying that we're seeing at the moment, not terribly well developed and looking a little bit weak. And down on the bottom right, we've got the pound. So there's some pound selling coming into the market. So let's go and have a look at, not against the dollar, because it's actually moving in lockstep with the dollar, as you can see here. So if we went to the dollar, pound dollar, certainly on that slower time frame, let's just see what's going on in terms of cable. Let's just switch this over to cable. Okay, we've got volatility trigger on 15. So there's going to be some, and we've got it on 3, and we've got it on 5. So we've had the usual volatile open, lots of volatility triggered, lots of traps going on, market spike, we're trading inside that range, going to stay there for a bit. And of course, this has been heavily bearish for some considerable time. And the issue, I'm just going to move that out of the way so I can grab it. There we are. The issue for us as traders is always this. When you get these markets which are collapsing, and it's certainly true of the Aussie yen, it's been true of oil over the last couple of years or so. We've had these very strong moves, and certainly in terms of pound, massive selling of pound. We've come off 135, I think 136, 137, all the way down to 121. When you get these immensely strong moves, it's very hard to mentally readjust to trading in the opposite direction, because your constant fear is that you're going to be trading against the dominant trend. And whilst that's certainly true, what we're starting to see in terms of the cable chart at any rate is there is some buying coming into this market, certainly on the slower time frames. You can see it here. For example, this very tall volume bar here, which is actually pretty much the tallest. It's not quite as high as this one, but getting on that way. And what you're seeing here is the first sense of some strong buying coming in, because it's had such a strong sell-off, driven, of course, by politics. But nevertheless, when you start to see these sorts of candles developing, you've got a very narrow candle, very narrow wick, but a ton and a half of volume under it. After you've seen a fall like this, there's only one thing that can be, that's buying coming into the market. Does not mean that market, and we always say this about volume price analysis, what VPA is not. When you see these signals, it's very easy to jump in straight away and think, oh, fantastic, you know, this market's just going to shoot up here like this. it's not, because two reasons. First of all, because there is a hell of a lot of selling to be absorbed following such a dramatic move, and that doesn't happen overnight. It's like a sponge. It has to be mopped up over a period of time. But the longer this stays range bound, then the that selling pressure that's been so heavy in the market will gradually be absorbed further and further until ultimately there's very little left, and at that point that is when the market is like to rally. So that takes time. It doesn't happen overnight, and it doesn't happen on one candle. Rarely happens on one candle. It happens in equities from time to time. In fact, we've seen it, yesterday to some extent. This very sharp sell-off and a very sharp reversal. But in terms of the longer-term rally, the prospect is that it's going to move into congestion before it actually develops a reversal trend to the upside. In other words, going from what was the primary trend lower into congestion, and then out the other side into a primary reversal higher, bearish to bullish. But that's certainly a signal of some buying coming into the market. So all I'm saying is don't be frightened of thinking that no one's buying the pound. It's cattled. It isn't, and that's certainly a signal that there's some decent buying coming into this market. I'm just going to pass back to Anna. Hold on a moment. Yep. Do you want to change charts, or do you want to go back to you? Yep. Okay. Yep. Just going back onto MT5 for a moment.
Can you see my charts? What I wanted to highlight while David was speaking was I mentioned earlier about slower time frames and using what you see in terms of price action on the slower time frame, on a slower time frame, whatever that slower time frame you use to kind of trade with or trade against, as it were. You could be looking at if you're if you're looking to hold a position for maybe a number of days, as it were, your slower time frame could be the daily chart. But realistically, most traders are intraday traders, and certainly when there's a lot of volatility, as we've seen around, and big price moves, sometimes it actually, I know you say, well, you should go slower. Sometimes it pays to come to the slightly faster charts. I'm not saying you go to the seconds and the 1s and the 2 minutes, but don't. Markets are like this. It's not a good idea. The longer you stay in, the bigger the risk that you'll be taking, because you could be completely upended by a tweet from Donald, or a missile being fired somewhere. So very, very nervous market. Anyway, back to the CSI. This is the hourly CSI. As I said, I was looking at the 30-minute, but what's interesting looking at this on this time frame saves you having to look at all those charts. Can you see these big moves, big ranging moves that we've had in capturing these fantastic trends that you've seen really everywhere? You can see this is the collapse in the New Zealand. I mean, if you go and have a look at the daily chart of the Euro New Zealand, the Euro Aussie, huge shooting stars on the day. Anyway, that's when you have these big ranging moves. When they're like this, what it's telling you is that price action is contained. It's within a range, or it's moving quite slowly. But there's something is moving. David's been looking at the British pound, and you look at these lines and you think, as I said, when you see, it may not be very much, but it's a nice sort of sharp move. You've got a sharp angle on the line, rather than the sort of general sort of waggling along the middle. It's telling you there is some not serious buying coming into the British pound, but enough potentially to for you to investigate further, as it were. If you are the kind of trader that David and I are, where we just look for opportunities, we don't really care where they are. If they're buying pound, we'll buy pound. If they're selling pound, we'll sell pound. We're not, as a trader, You cannot afford to be wedded to anything. That's it. It sounds very cynical, but that's what you are. You are a speculator. You know, if something is going up, you think it's going to go up, you buy, and if you think it's going to go down and everything setting up for a sell, you sell. That's it. You're not an investor. As an investor, you have a totally different mindset. That's another ball game. So, but what this hourly chart is telling us of the CSI, it really illustrates the drama that we've seen in the individual currencies, and then obviously in the currency pairs, and what we are seeing at the moment. There is no drama at the moment. You know, everything is quiet. We're having a quiet scene in the markets, but there is still something going on. And in fact, the one you can have a look at, as I said, you can look at the matrix and, you know, look at the pound pairs in more detail. And the one I actually had a look at, which is the pound Canadian. And the reason I looked at the pound Canadian for a number of reasons. First of all, the 30, it was trading on the volume point of control in a sideways, in a, you know, just range bound. Trading around the volume point of control is where the market has a degree of agreement. You know, the buying and the selling, you know, there's no firm, there's nothing to push it in one direction or another. One of the things we cover in great detail in the program is the three Wyckoff laws. Wyckoff's second law is the law of cause and effect, and it's the second law basically says the longer a market or instrument stays in, which is really a consolidation phase, then the greater, you know, when it does break away, the greater that effect will be. So this is the 30-minute chart, and it's been it's been moving sideways within a range. We know it's a range. We've got support and resistance. I've actually got fractals here. We use the pivot indicator also to pinpoint the highs and the lows. But the important thing is the volume point of control. Now, it's actually shifted off that with a degree of volatility because we have the volatility triggered. That means that this price action is outside of the average true range. Reasonable volume. It's certainly over the average line, as it were, but nothing like the volume that was under this candle. So we've got volatility and we've got a bit of an anomaly from a VPA perspective. But on the 30-minute chart, that may have been enough to take the move that we have seen on the faster charts. In fact, that was also accompanied with volatility. Yes, we had some weakness coming in here, then we had a bit of sideways, then we had another volatility candle triggered on this one. This is on the 3-minute chart, and now we're seeing a retrace within the spread of the candle. It was only a short burst, if you like, at the open. You can trade the open if you are aware of the traps that can ensue by looking at as I said, a slower time frame. You know, if it were possible, you know, could you have possibly entered a trade to the long side? It all depends. It all depends on whether you even would consider taking a trade based on, which is really a breakaway or a breakout. They can be successful as long as you understand, you know, what you are looking at in terms of the price action. It's on the volume point of control. Yes, we've had volatility. What tends to happen after volatility is the price will generally retrace to within the spread of the candle. Now, if you miss this move and you still think, because we look over here on the 1 hour, that, you know, there still seems to be some buying of the British pound, perhaps not quite so much anymore in the Canadian. That was more as a result of the open. You now have to be patient. What do you have to be patient about? Well, you have these volatility candles. The highs and the lows of the candles act as another form of support and resistance. So if it manages to clear whatever the high of this candle is here, carry on higher, there is a chance that would, you know, that will carry on. That's on the 30-minute chart. So, you know, you could be using the 30-minute chart as an entry. What would you benchmark your 30-minute chart against? Well, maybe you would look at the hour, maybe you could look at the 4-hour chart. So as I said, you take these little groups of time frames, and you basically see, are you happy looking at an entry on a 30-minute chart? You know, do you have the patience for that? Some traders don't. A lot of traders, you know, they like the faster charts because they're in, they're out, that's it, job done. The 30-minute chart, maybe for if you don't have the luxury of being able to sit in front of your screen, you can be a little bit more considered, a little bit more measured, and you can maybe, you know, put limit orders in and then just say, right, if they're triggered, they're triggered, and if they're not, they're not. And I think they're particularly good, David, if people are working. So if you're working, you're saying, yeah, you know, I'll use that time frame, which is a perfectly acceptable time frame to use. To get back to the faster time frames, because as I said, this is the move away from the volume point of control, and looking at the CSIs where we CSI across multiple time frames, we can see there's been some buying of the British pound. What we have here, I've actually got a Renko here, which is a fixed Renko. It's not an ATR, based on 3 pips. That is actually still blue. We've got the little sort of pullback here. So I haven't put the other indicators on here as well. With our Renko, you do have the option of adding standard indicators on our own indicators. You may have noticed on some of my Renko charts, I have the full set on and others I don't. But this is what it would look like with just the indicator applied to the chart. So you have the obviously the red bricks are down and these are the blue. And you know, you would, the thing with Renko, because it doesn't have time in it, you could actually see that you can see the trends. You can also see the times when, you know, the congestion of phases. You have very clear levels, and as I said, here at this point here, you would have had this is the support line. You would wait. Where would you re-enter? Well, this is the congestion at this point here, and where it goes. And that's a little bit of a move there. One little pullback, which you've come out. How you use Renko, whether you wait until you have different colored bricks, we use the trend dots, 1 trend dot, 2 trend dot. It's all, you know, the videos at quantumtrading.com explain in a little bit more detail how you can use this indicator, and on it goes again. And then we did have this slight reversal here, back into congestion, and up we are again. And does it look as though we're going into congestion again? Possibly. The nice thing about looking at Renko like this is it really does explain price action in a very visual and in a very clean and simple way, and actually watching it as well with Renko, because one of these bricks is being posted after 3 pips are going through. It gives you a sense of the momentum that is in this particular pair at the moment. And in fact, looking at it here, we've had this retrace. It looks like possibly it does want to go higher. Looking at the 3-minute, where we've had this trigger of the volatility. Pardon? Is there? Right. Can I move back to you then? So we've got the resistance here. It looks like it's going through, and David tells me there's been a bit of a pickup generally in other pairs. So I'm just going to move over to David. And in fact, on the 6-minute here, volatility. This is a little trend with volatility. Explained again in the education program. Trends come in all shapes and sizes, you know, different flavors, if you like. There's a trend with volatility, trend without volatility. That's all explained in the program, how you recognize it, and the advantage, you know, if you're in a trend with volatility, the advantages and disadvantages, because it has implications on your stop loss management as well. Right, I'll pass it back to you.
Sorry, over time. Yeah, I have. Yeah, over time. Apologies, I'll be brief. This is on 5. Strong buying of the pound. We've got strong euro, and we've got equally strong. We've got strong selling of the yen. We had the dollar moving sharply south as well. So there's a lot going on now, and this is what you have to wait for. This is you know, where we joined. This is where we started. Now everything's starting to move. There's some really strong trends developing, and you can see it here on the CSI instantly up onto 15, getting the same sort of picture there. You know, you're not going to look at things like the CAD yen, because the CAD's moving with the yen, so that wouldn't be one to look at, nor indeed would the Aussie yen be one to look at. But anything else against the yen, you know, happy days. And all of that, what I've done on the matrix, this is on 5. I isolated out the dollar here. You can see cable up at the top here. strong selling on dollar Swiss down here at the bottom, and this is what you want to see. You want to start seeing these guys move up to the top here, these guys moving down to the bottom to join this one. So the sentiment towards the dollar is pretty much universal. Cable's got a little way to go. It's up at 10 at the moment. We've got pound New Zealand up at 14. And these guys have got to drop down here. So we've got to go -4, -8 at the moment. That's on 5, 10 and up to 15. Similar sort of picture. Hop onto the array. What have we got in the array? This is isolated out in terms of dollar. We've got cable, which is moving the most strongly. You can see it over here starting to develop a nice line. Dollar Swiss, that one that was down at the bottom there, is really not so strong at the moment. So certainly seeing the strength here. You want to see these others join it up there as well. Up onto 10, dollar isolated out there again. You can see the strength of cable. There it is, that very strong line. These are less so. This is not such a strong trend in these pairs. This is where the strength is very much in the pound. There's no great surprise because we're in the London Open. And what I wanted to show you now is I've isolated out the yen pairs here. If you remember early on, they were all sort of flatlining in here. It was a right old mishmash. It was in this sort of area here. Now they've all joined one another. What does that tell you? It tells you, first of all, that yen sentiment is universal. In other words, we're selling yen right now. And if you've got Globex up, if you're on Ninja, you've got Globex up, you'll see instantly what's going on in terms of indices. They should be tracking up following this, because this is all about sentiment flows. It's about sentiment, risk on, risk off. It's all explained in the program. And that's why most traders struggle with this market, because they don't understand the relational aspects of looking at currencies and currency pairs in relationship to the whole market, and not just sitting there focusing on a single chart and a single time frame, which is even more dangerous. Yeah, and using geometry and all that stuff. Anyway, there we go. So that's what's going on in terms of the yen right now. And this is the picture you want to see. It's universal. And if this continues, you'll see these weaker ones here, the Swiss yen, maybe move up to join it. The strongest right now is Aussie yen, pound yen, CAD yen. Don't even need to look at a chart. But if you're trading these charts and it's telling you that, first of all, where the strongest trends are, and secondly, that the sentiment for that pair you're trading is universal. In other words, the flow right now is the market universally is selling yen. There is no divergence. You're not taking a bigger risk. The risk is much lower because you are trading with the universal flow of the market. That's it. I'm done. Anna's done. We will see you at 3:15 this afternoon. Thank you so much for coming along today. Hope you've enjoyed it. And yeah, if you want to get in touch with us, it's anna@annacooling.com, or myself is david@quantumtrading.com. Happy to answer the questions there for you if you want to drop us a line and get in touch. Thanks for coming today. Hope you've enjoyed it. And we will see. Enjoy the rest of the trading day, by the way, if you're not coming along later. And have a great weekend. See you soon. Bye for now.